Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And we are coming to the end of January. Can you believe that? This month has flown by. We have one more trading day, and this has to be, I think by all accounts, the most volatile January period we've ever seen. It's certainly the terrible start to the year historically. But I want to show you just on the screen, everything still remains red. I mean, look at this. We've got S&P 500 all negative, NASDAQ all negative, Ford Motor Company, negative. Harley Davidson, negative. JetBlue, negative. Caterpillar, negative. Spot Gold, this is GLD, the ETF, a little bit of green there, that's looking good. Crude oil, still negative. Apple, still very negative. Barrick Gold, very bullish. And the Dow, all negative. So that's how we stand. So let's start off with the S&P 500. And as you can see on the chart, we've had this enormous top that's been built that really has sort of put an end to the bull market that we started in the first quarter of 2009. There's a big rounding top. This is a key area to watch right here. I would say if we close below the lows we saw just a few days ago, then this market will begin to accelerate. We do expect it to go still lower. You could easily see this market, I think, go from, let's say, we count from, let's say, 1900, we'll round this off to 1900, to, let's say, the highs here at 2100, 200 lower. You could easily see it going down to this period here, 1700. We are oversold, however. The resistance line is going to be this 50 line here. I don't think we'll see a rally over that. We may see some recovery. I would not be surprised to see that, but nonetheless, this is a start of a bear market in our opinion. This is a chart of the Dow, same charts, but you can see again the same sort of pattern here where you've just sort of just gone over, just kind of like, it's just not acting well. I mean, there's the big sort of rounding top. You just sort of this area here, if we close below that area that we saw in August, late August, that's not going to be good, and it'll accelerate. This pattern could be a flag pattern, which would be very bearish in my opinion, but nonetheless the resistance is going to come in the 50 line right here on the RSI. Watch it carefully, but all the trade triangles are negative on the Dow. This is the NASDAQ. Again, this has sort of held its own, but it's really hasn't done that well. You can see the very oversold condition on the RSI. You can also see that we are negative on all the trade triangles, and plus, if we put those trade triangles here, you can see they're all negative. Not a good sign. This is JetBlue. You can see the monthly came, even with lower fuel costs, they're still having a hard time, and that's not necessarily a good reflection of the economy. I would say if we were to go through the 20 level on the lows here, that would accelerate this position, and I think we could easily see this market come down quite a bit lower. They should have benefited much more from lower fuel costs, but something is amiss here, and I think we'll see what that is in the future. This is Apple. We've talked about Apple. This is a new low today, 93.67 currently trading. We did very well on the position trade on the earnings and also the options trades, so I think Apple could go quite a bit lower, down to maybe the 80 level, which doesn't seem like that far away now, but certainly when it was 130, it seemed like a lifetime away. This market's, the fortunes for this market have really begun to deteriorate. The smartphone market is saturated. They have to come up with a new product, and it's going to be very hard to replace the smartphone, which takes about 70% of their income comes from that one phone. This is crude oil. You can see crude oil is really, let's get closer in on the crude oil market because that's something I want to share with you. Let's just do let's say a 3-month. We were talking about the 28 to 30 level as a sort of target zone. We certainly got there, but we're back up to resistance at 50 now on the RSI. Very close to making a turn, but I'm not sure we're going to see that happen for the moment. We want to see a little more close, but you should be, based on our trade triangles, you should be out of this market right now. We use the monthly for just longer term trends, the weekly for the major trends, and the daily for timing. So timing-wise, you should be out at 32.74. It's going to trade at 33.35. So you should just be on the sidelines here watching the market. This is Ford Motor Company. Good earnings, but look, the stock's going down. I mean, that's the bottom line. I mean, I hate to say this, but the stock is going down. The trend in this stock is really just negative, and I think that's the key thing you have to look at and go with the trend. That's telling you the story. There's this original sell signal at $13.40. The trend changed to we're currently trading around $11.60. So it's worked out well, but not for Ford. It looks like it's headed lower. This is Harley Davidson. We mentioned this just because it's a lot of people like this stock and ride Harleys, but nonetheless, it's still negative. The trend is down. I'm saying if the economy was so good, all these things would be doing much better. Even though they're announcing some good earnings, it really hasn't. This may be the last good earnings period we see in 2015, the fourth quarter of 2015. Caterpillar, again, this is a something to look at. A little bit of a change here. We've got a daily that came up, but nonetheless, the weekly and the monthly still negative on Caterpillar. Caterpillar can't get a break anywhere. That's just the way it goes right now. So sideways to probably lower on Caterpillar. This is Barrick Gold. We've talked about Barrick Gold. We've been bullish on Barrick Gold. It's worked out well for us. We looked at a 6-month chart. Actually, let's do a 1-year chart. You can see had a nice rounding out, the breakout we expected. Very overbought. I think we'll watch this market very closely next week because we probably want to take some profits on this position. But let's just put our Fibonacci lines in here. We got pretty close to the 50 line right here, and we could see possibly 61.8% retracement, just a little over 1050. So let's see how that plays out. But nonetheless, looks like the trend in Barrick, if you just put our trade triangles in, you can see are pretty much all positive. So let's see what that happens there. Pretty much the same with the GLD. The GLD is picked up, of course, and we've over the 50 line. We may be, let's scope this in just a bit, just easy to do it. Just click on the little magnifying glass. Let's put a Fibonacci in there and see what we come up with. Again, we're in the zone 107 to 108.80. That's where this market should probably find some resistance. Maybe next week we'll see how that works out. But hey, it's been quite a week with the snow, with the markets, everything else going on. We'll see how things work out in February. I'm Adam Hewison for Market Club. Thanks for watching. Have a great day, everyone.